This is how my clients and I use our superannuation to invest in property. And I want to show you the structure and kind of the cash flow, how it all works. I can use mine as an example so that you can clearly see how it all works. So basically, currently you have your superannuation fund. What we did is that we set up an SMSF. And so in order to do that, I spoke to my accountant. We set up the SMSF together. And what that looks like really in terms of structure is, instead of having it in a managed fund, you have what's called your SMSF. So we might call this Hendri Super Fund, and that will be your superannuation account. We have a corporate trustee, so it's a company that's the trustee for the super fund trust. So again, we might call this Hendri trustee, for example, as an example, and I'll be the director, let's say with my wife, and the shareholder as well. Because I'm buying a property, I am needing to borrow money, and so we need what's called a bear trust. So that's BARE trust. And let's call this Hendri Bear Trust. And again, this particular trust will have its own corporate trustee. So again, let's call this Hendri Bear Trust. And again, I'll be the director and shareholder as well. And that's what's going to own the investment property itself. And so this superannuation fund, when you set it up, you're going to have an attached bank account, and that's where the money gets rolled over into. So let's say, for example, there's 300,000 in superannuation. And an example, that will be used as a deposit and cost to buy this investment property. I'll have some money left over, and I'll be able to invest it in other things as well as having some cash left over as a buffer. In terms of cash flow, I bought a property worth 650,000, and let's say I put in 200,000 as a deposit, the difference there is going to be 450,000 as my loan. Now, the SMSF loan, because it's a corporate trustee and it's a trust, the bank actually charges a slightly higher interest rate than if it was in your personal name as an investment. So like right now, interest-only loan for an investment is around 6.3, 6.5%. For the superannuation, I'm getting charged about 7.2% as an interest and principal and interest to have this loan. So the interest only at 7.2% is going to equal to 32,400. That's just the interest only, because I want to work out just the real cost of it, because the principal technically is not a cost. I'm just paying back the loan. So the expenses per year, you still got the council rates, water rates, and building insurance, landlord insurance, the agent to manage it. All of that is roughly around $6,500 a year, which means that we have $38,900 as a total cost. Total expenses. This house is going to rent for $600 a week. So times that by 52 weeks, the total income is going to be $31,200. But I also have my contributions go into here. And so my wife and I, let's say that we have $15,000 each going in terms of our super contribution. So super contribution 1, super contribution 2. So really we have a total of $61,200 going into this fund. The real expenses is $38,000, which means that we have a profit of $22,300 in the superannuation fund. Now, a portion of that is going to be going towards the principal, so we can work out kind of, what the principal and interest repayments will be per month. And that money also, we have to do a tax return and an audit every single year as part of the requirements to having an SMSF. And so a small portion of that money will be going towards that maintenance fee. But otherwise, if I didn't have it in this, I would have it in my, all fund, and there'll be fees out of that as well. So when I calculated it, about the same, if not a little bit cheaper actually overall when have it as an SMSF. But the main thing for me is I have leverage, I'm able to buy this new investment property. We have a tenant that's paying all of the cost involved. And I feel strongly about property, and I feel like it will do better over time, but that's my preference. So for you guys, if you something that you're interested in, speak to a financial advisor, check out your situation and make sure that it is beneficial for you, it is going to help you. Speak to the accountant to ensure that you get the correct setup, for example, and then any other legals and stuff for beneficiaries and wills and things like that. Yeah, that's my cash flow and that's my setup. I love it. It's what I enjoy doing.